Good afternoon, everyone. Welcome to this session on the launch of HDFC Innovation Fund. Uh, I have with me Amit Sinha, who will be the fund manager for this fund. As you all know, Amit Sinha also is a fund manager for one of our thematic funds, that is HDFC Non-Cyclical Consumer Fund. I just want to briefly introduce him. He brings along with him 2 decades of experience, 5 years of which has been with HDFC Mutual Fund. Uh, uh, so he's an IIT Roorkee graduate and is also done his MBA from XLRI. So before I pass on the floor to Amit, I just want to set the context a bit. Why innovation fund? Why equity? So many questions are there in people's mind. I just want to start off by saying that, uh, in the past, innovative businesses, whether it is in the Indian context or the global context, has been strong wealth creators in the stock market. So that is the basic genesis of this fund, with which we are launching this fund. A key question arises: how is this different from many other funds that we manage? What is it that differentiates it from other mutual funds that we have? We also will discuss. Amit will cover that in detail. How do we go about selecting stocks in this fund? Uh, we have actually done a lot of homework on this, going through a list of about 2,500 companies, individually rated their innovation score, and come out with a filtered down universe of about just over 200 or 250 odd stocks, which have a slightly stronger rating than the rest of them. So we have a universe ready, which we believe is a list of businesses that are outscoring others from an innovation standpoint. So what is meant by innovation? What do we mean by innovation? Whether it be product innovation, process innovation, or continuous way they remodel their thinking. More on that, I will leave it to Amit to cover that in detail. Uh, Most importantly, people do ask this question: is it all about technology stocks? Let me tell you, this fund is not just about technology-led innovation. All kinds of innovation is taken into consideration. Uh, how, how is India ranking when it comes to innovation? We've traditionally seen a few countries like US has been on the forefront of innovation over the past maybe 50 years, 60 years or so. Briefly, it was Japan's time. Then China came into the picture in terms of how to innovate and grow. Uh, we've discussed all that in the presentation. Again, I'll request Amit to take us through in detail. Just one bit at this moment. The presentation, if any of our viewers don't have the presentation, it's available for download in our website in the respective product page, where there's a product page of Innovation Fund. So do take your time and download and read at your leisure. I hope it contains a lot of useful information. With that, I will hand it over to Amit.
Yeah, thank you, Ram. Great context set for the overall theme. So thanks for that. Hi, everyone. Good afternoon. Ram set the context right for the theme and for the fund. I think clearly the endeavor from our side will be to create a portfolio of company out here in HDFC Innovation Fund, where innovation is at the core of the functioning of the company. And this is mainly, companies strive to either maintain or gain market share, and hence, innovation to that extent, it is something which is almost kind of an essential ingredient in a success of any company, and hence, broadly speaking, the attempt is to create a portfolio of company which are future ready and have a high growth profile. Also, to speak, this portfolio will be, again, very diversified, and will keep a kind of a flexi-cap approach. More clarity will emerge on basically what will get into the portfolio, what is the overall basically universe where we will be selecting from as I take you through the presentation. Yes, okay. So this slide basically talks about innovation, and as you all are aware, innovation is the process of introducing new ideas, services, or products, or improve existing ones to create value. And again, this is all to either gain market share or to maintain the competitive edge in the overall context. We have a few examples of innovation. First is product innovation, where product innovation is broadly of three types. First one is radical, and to name few, radical innovation can be something like a Google search engine. Basically these are some of the innovation which completely kind of changes the market dynamics, where they create a new market altogether. There was no for such kind of innovation, no existing market is required, and they kind of create their own markets. So a Google search engine, or a Airbnb in hospitality space, or a new pharma drug, an NC molecule, either it is a new chemical entity or a new biological entity in the pharma space. They are all categorized as broadly radical product innovation. Disruptive innovation is the second type of product innovation, and some of the examples which I can think of can be here can be iPhone, wherein iPhone was not the first mobile phone, but when it came, it kind of completely disrupted the mobile phone universe and gained market share as they kind of combined internet with the telecom technology overall, and hence disrupted the existing ecosystem. Similarly, Uber can be said as a disruptive product innovation. Incremental innovation is again different versions of, let's say, iPhone, or different versions of Microsoft Windows, etc., etc. Coming to process innovation, here again, companies, they kind of tweak processes to either create a cost advantage or a quality advantage. And some of the examples of process innovation are what at this point of time, what I can think of is that, one of the great process innovation was the lean manufacturing of Japan, in 1970s, in the auto space, where they completely changed the paradigm of cars manufacturing overall. And they came out with cars which were less fuel guzzling, and they gained market share disproportionately across the world, mainly from the US cars. Similarly, some of the Indian examples can be insurance tech companies where they used a different way of selling insurance through platforms. That can be one of the leading examples. Coming to the business model innovation, here the attempt is to completely change the revenue stream or the cost structure, and the business model is completely different of the company. Some of the examples here can be, let's say, the fintech brokers in India. When they came in 2016, they completely changed. The commission was on a fixed trade, on a per trade basis, and not on the overall trade value. And also they used technology to kind of disproportionately onboard clients. Similarly, other examples can be quick commerce, where again the business model is completely different in a retail setup. Netflix, Spotify, to that extent, even IKEA can be classified as a business model innovation. So these are some of the types of innovation, and it was important to kind of set the context right out here. Moving on, what we have done is to kind of straight away give you some of the insights into the innovation from an Indian context, so that because the fund endeavors to invest in the Indian equities primarily, and hence upfront giving some of these examples was important. So the first example is again, on the right hand side, if you look at the chart, uh, how the top two fintech broking platforms, they have gained market share in the last 5 years. In fact, if you kind of go back, before 2016, these brokers, fintech brokers, were not existing, and hence the entire 40+% market share is gained in the last 10 years. So that is one example. Second example is of a leading insurance tech company in India, which has again grown disproportionately in terms of the market share in premiums, and is a leading example of innovation in the fintech insurance side. Moving on, in the basically this is the example. Again, the data on the left hand side is physical channel, total share of transaction of physical channel in a leading public sector bank. And if you look at in the last 10 years, the share has come down dramatically, and it is now below 2%. I think it is important to highlight that technology not only helped to kind of change the business model and gave convenience to the consumers, but also it kind of altered the cost structure for some of these banks, especially the private banks in the last many years, which helped them to kind of gain market share disproportionately, and also to kind of gain on the profitability side. So I think these are some of the leading examples which we wanted to kind of show. Another example is of quick commerce, which is growing, as we all are aware. It is growing disproportionately, and in the next 3 years also, the growth rate is expected to be at a very healthy pace. This is, one example uh, of the auto of one of the leading auto manufacturer. And, we have put this example again to go back to Ram's point that this is, it's innovation is not limited to only tech. So here a leading manufacturer, auto manufacturer, has gained significant market share in the last 4 to 5 years, mainly because of introduction of new designs and new features within their cars, which has helped them to gain market share. This one is the last example of the current set of, again, in the defense space, how India has kind of very successfully indigenized a lot of platforms. This one on the left hand side is US Apache, and right hand side is Prachand, which is India's light combat helicopter, which is indigenously made. And if you look at the cost structure, our product, Prachand, is almost at a half the cost of what US Apache cost, and more importantly, some of the features like service ceiling, which is a very important feature. This particular light combat helicopter, they are used in difficult terrains like Leh and Ladakh, and in these terrain, the service ceiling is something which is of the prime importance. And in some of the features which has been kind of there in the Indian made light combat helicopter, they are actually better than the US one, and at a low cost. So we are, some of these examples very clearly kind of highlight that R&D investments over a period of time, and different business model innovation, they have not only helped to gain market share, but also have helped to kind of bring down the cost meaningfully, which is very, very important from an Indian business ecosystem point of view. Now, moving on, we have in the next few slides, we are trying to showcase why innovation is important from an overall economic prosperity and market leadership point of view. So if you look at this slide, here what we have done is kind of given country-wise, some of the growth rate during the period when the country came out with very different and very leading innovation, which kind of gained market share across the world and help the country to grow disproportionately during that time. So the first example is US. We all are aware of US exceptionalism, and very clearly, US has been kind of at the forefront of innovation across last many centuries. And here in 80s and 90s, very clearly the rise of personal computing and the development of internet and e-commerce. And on the pharma space also, there were many innovation which came out of the country, which helped to maintain a very strong growth rate, which US was already seeing before that period. China, as we all are aware, in the last 15 years, the leadership in not only on the telecommunication side, AI and smartphone manufacturing side, but also on the EV ecosystem side, they have demonstrated a very strong innovation ecosystem, which has helped them, which has helped their economy to grow at a pace which was kind of unheard of from a scale. Basically, China has grown almost close to around 8 to 10% for the last 20 years, which is kind of an economic miracle. And a large part of that has come in because of the kind of innovation, ecosystem they have developed in the last 2 decades. Japan, again, going back to 50s and 60s, one of the examples I talked about was lean manufacturing in autos. They were also kind of, very innovative, and their steel production was something which kind of gained market share disproportionately. Also in consumer electronics, there were multiple innovation which came out of Japan during that time, which helped their growth rate close to around 10% CAGR for almost 2 decades of 50s and 60s. South Korea also during 80s and 90s, they grew ahead of the world, and mainly on account of industrials, higher innovation in the industrials, autos, and on the semiconductor side, they came up with multiple innovation which took market share from globally. Moving on, one of the important characteristic of innovation which we have observed over the last many years is that the lifespan of the innovation has been kind of reducing. What the leaders of yesterday are very clearly, may not very clearly are not leaders today, which is very kind of easily demonstrated by the table which we have given on the right hand side, which is the top 10 companies of S&P 500 index. What the leaders of 1990 are nowhere seen in 2024. For that matter, very few of them were able to kind of even exist in 2010, barring I can see only a couple of them existing after 2 decades. So the innovation cycles have been kind of reducing from 35 years in 1970s to 20 years in the last 20 years, and it is projected to further come down to 15 years. So it is what we are, the message which we are trying to give here is that, one has to be constantly, look out, basically the innovation can completely, or the strategies can completely change. And depending on that, new companies can emerge, which can take market share disproportionately from the incumbents. One of the key reasons for higher adoption for some of these innovation in the last few years is basically the lower cost of innovation itself. I think very important, very pertinent point to highlight that at the end of the day, it is the economics of the of that particular technology which helps the adoption. And until and unless the economics of the overall technology comes or is better than the existing kind of technology, it is very, very difficult to justify just on the basis that it is a new technology. We have seen that trend playing out in EV batteries, where the lithium iron batteries costing has come down dramatically in the last few years, which has led to higher adoption. Similarly, the solar module pricing has come down dramatically again, which has led to higher adoption of solar energy. What you can see in the right hand side bottom chart. Now, this slide to me is one of the very critical slide, and this demonstrates that at the end of the day, what matters, and we always talk about earnings, and ultimately the market looks and focuses on earnings. The left hand side chart uh, basically compares the earnings growth, EPS growth of the top 7 companies, which is also called as Magnificent Seven in US, and their earnings growth over the last 20 years versus the index earning growth in the same period. And you can look at the difference. The top 7 companies' earnings growth has grown by 48 times versus 3 times growth in the S&P 500 index, which clearly demonstrates, the part that some of these companies which innovated, they not only kind of gained in terms of the stock prices and have seen higher weight in the index, but they have also kind of delivered a superior earnings growth over a period of time, and that is ultimately it is important from a sustainability point of view. And we are talking about 2 decades of earning, and that is why some of this thing going back to the original kind of hypothesis that what was highlighted by Ram as well, that some of these companies, they have used innovation to gain market share and ultimately to kind of grow their earnings ahead of the index. The next 2 slides are basically the weight of uh, IT companies, information technology companies in US, S&P 500 index, and in China. Again, disproportionate market share gain in terms of the index weight of the information technology companies versus the energy companies. And this is what we are, to some extent, we are forecasting a similar kind of event can play out in the next 2 decades in our ecosystem, in our markets as well, where some of the companies which are using innovation can gain significant share in the overall index. This is, again, harping on the point that innovation is not just in technology. First chart is about Tesla versus, basically the US auto index. Again, a very handsome kind of an outperformance of 30 times. Similarly, Netflix versus, basically a linear TV player, Comcast. Netflix was able to outperform by more than 200 times. In pharma also, AstraZeneca in Europe, basically FTSE index, they have outperformed the FTSE index by almost 3 times. Clearly demonstrating the fact that, in every sector, companies who are using innovation or kind of using different business model and are using other innovative strategies, they are able to kind of gain market share, and stock price is just reflecting the market share gain and the earnings growth higher compared to the rest of the index. Examples in India, again, between 2000 to 2007, telecommunication as a sector gained market share. We all know about information technology sector, between 95 to 2024, significant gain in terms of the index weight, in over the last 2 decades. And the last one is the new age companies, as we define it. In the last 5 years, very few of them have been listed at this point of time, but clearly 2%, close to around 1.8% of the index weight, of Nifty 500 is now of new age companies in India. Now, next few slides, we talk about the innovation ecosystem in India, and we give you some of the pillars why this ecosystem has been developing in the last few years. Especially the last 10 years have been kind of very dramatic in terms of the kind of development which we have seen in the innovation ecosystem. If you look at the slide, India has clearly risen in terms of the innovation ranking. In the last 10 years, we have risen from 81st rank to now 39th rank. And within the emerging market economies, we are now only next to China. Which is a very, very healthy sign and very encouraging sign from an innovation ecosystem perspective. And this is, the result of multiple years of effort from the overall, Indian company side, where, there has been a significant surge in terms of the kind of patents, the number of patents which we have filed in the last many years. India's ranking is also, because of very high ranking in the knowledge and tech side, and in the market sophistication side, which is basically the funding environment has been very good, which is leading to higher innovation ranking. And this is, again reflected in the number of unicorns which India has. This is only next to US and China, and very clearly reflects the kind of thriving ecosystem which we have on the innovation side. This slide talks about the kind of talent pool we have. If you look at the tech talent, India is only next to US. We have a very, kind of a healthy yearly, STEM graduates, which is highest in the world, 22.4 lakh STEM graduates graduate yearly. But I think the important point here to highlight is that in the overall scheme of things, if you look at, and maybe a couple of decades back, we all used to talk about brain drain, and in my view, very clearly, the situation is changing, and what we are seeing is that a lot of talent, a lot of high quality talent, they are getting retained, and the retention is mainly because of we have a thriving ecosystem where companies are able to kind of innovate, and we see a lot of kind of startups which have done well, and the promoters are rewarded not only by by the success of the company itself, but also from a funding ecosystem point of view. A lot of these promoters are able to kind of kind of exit and to gain financially. So that ecosystem is very, very rewarding. Also, the salary gap has been kind of reducing from on a PPP basis. If you look at the right hand side chart, the salary gap between US adjusted for PPP has been kind of has been kind of bridged, and now it is almost kind of at a similar level, or at what US is, basically is at what India is. If you look at some of the very, very specialized roles, and I believe that this is kind of now percolating to other other industries as well, including finance, etc., where the salary levels have kind of risen and is now, on a PPP basis, are at par with some of the global salaries. Also, if you look at from an economy point of view, India's standing has improved dramatically, right? I mean, we are the fourth largest economy in the world. And I think that also kind of brings the attention, and people want to kind of come to India, and if people want to kind of stay back in India, and because amongst the larger economies, we are the only ones who are kind of growing at more than 5%, which is, again, very, very healthy and very, very strong. So these are some of the reasons why we believe that, the brain drain scenario which we had can kind of completely reverse in the next couple of decades. Moving on, I think this slide kind of highlights a very strong funding environment, which has uh, uh, which is prevailing in India from an startup ecosystem point of view. If you look at last 5 years, the average VC investment has kind of gone up compared to the last 10 years before that. And similar is the situation in seed funds. Similarly, the exit funding, the exit environment, for the VCs and the PEs have been very, very healthy. And that is reflected in the kind number of IPOs which has happened since 2021. It has kind of almost doubled compared to the cumulative number of IPOs before 2021. Government has been very, very supportive. We all have known, JAM Trinity was something which was kind of highlighted, wherein very cheap data, the availability of smartphones, the kind of penetration which we have seen of the smartphones, and at the same time, the kind of infrastructure which the government built on the digital infrastructure, public infrastructure side. I think all of that put together helped the Indian startup ecosystem to kind of start kind of gaining a lot of muscle, because of some of these enabling factors. And if I look at the starting point of some of the large ecosystems, some of the large companies in the startup space, or the unicorns in the startup space, they all go back to the period of 2014 to 2016, 17. I think that was the inflection point, and we are yet to see a lot of that fruit to kind of come out, in the public market domain. And probably in the next couple of decades, we will see that happening. Some of these startups and basically companies can come in the public markets also in a large way. This slide talks about, some of the initiatives which the Indian government has taken, on the innovation, on nurturing the innovation ecosystem. I'll not get into detail given the paucity of time, but very important to highlight that the government is very supportive of some of these initiatives. Now coming to some of the sectors, and how these sectors are seeing innovation, and what are the key leading examples of innovation in each of the sector. Starting with autos, very clearly across the world, the EV penetration has been going up. The top left-hand side chart is basically based out of the EV slide, EV numbers of US, and on the right-hand side is China, and the lower side, if you look at the left-hand side lower chart, that is the India's basically left-hand lower side, I'm sorry, that is of China. The right-hand side, top side, is basically the India's EV adoption chart, and that is kind of going up dramatically, both on the four-wheeler side, and also we have seen a very high rate of adoption on the two-wheeler side. However, what I wanted to highlight on the autos, and to that extent in every other sector, Some of these, kind of innovation are not restricted to, kind of completely radical innovation. So this slide talks about the incremental innovation which we have seen, and again, some of the features like ADAS, etc., which has kind of which are incremental innovation, which has additional features which has come into the new cars in the last few years. They have been able to kind of help the overall, not only in terms of assisting the drivers, but also help in the overall safety features being enhanced dramatically. So these are some of the examples of incremental innovation which are happening on the in the auto industry. Also, this slide talks about the overall battery infrastructure which the Indian players have put in, or some of the tie-ups which Indian players have put in, for EV batteries, and the kind of ecosystem which we'll see in the next few years. Moving on, if you look at electronic space, electronics imports are now, the top two imports which we do apart from, oil import in India. Electronics is one of the largest import bill from a country's perspective. And to that extent, it is almost imperative to kind of build our own electronic manufacturing system in the country, because that also helps in the overall economy to kind of bridge the current account deficit, etc., etc. And the Indian government has been very kind of supportive of this by introducing PLI almost around 4 years back. This industry has seen kind of multiple intervention, and this industry has grown in kind of leaps and bounds in the last few years. In terms of component, basically the overall value addition, however, is at the center of focus. So India started, of course, like any other country, the start point was, of course, on the assembly side, and maybe the graduation was towards the testing side on the overall manufacturing ecosystem. But now slowly we are kind of rising on the component ecosystem, basically manufacturing of some of the components, and the overall value addition has risen to as high as now close to around 18 to 20% in some of the cases. I recently saw an article which was talking about that in terms of the Apple manufacturing ecosystem, we have already crossed 20% value addition, which is a very good sign. Basically that is an inflection point which everybody talks about. China is close to around 30-35%. Other countries like Vietnam, etc., they are in the range of 20 to 25%. So India has made a lot of stride in this side, but I think we need to kind of focus even more from the current levels, on the value addition side. And I believe that, the diversification strategy of supply chain from the global manufacturers will help India in the next few years to develop this ecosystem overall. Healthcare, as you all know, basically pharma, it has been a trailblazer in innovation. Clearly, pharma industry, we are all aware that, it is one of the Indian pharma industry is one of the leading, kind of industry globally when it comes to the overall manufacturing side. But also from an innovation point of view, in the last decade, there have been multiple intervention from the company side, and some of the leading companies, they are at various stage of kind of coming up with kind of new products. Of course, their products are at at various clinical trial stage, and we expect some of these companies to see a light at the end of the tunnel, because of the kind of efforts and the kind of R&D expenses they are putting in. The R&D expenses of some of these players, we are now talking about some serious amount of money which is getting into R&D of new drugs, which probably India has not seen in a major way in the last in this entire pharma evolution. Similarly, there are many companies on the CDMO side which are in the supply chain of large innovators. They are some of these are basically involved in the supply chain of manufacturing of GLP-1 and many other kind of innovative drugs. Some of these capabilities are again a result of many years of investment into capability building and R&D. Similarly, vaccine on the vaccine side, India has clearly kind of demonstrated the kind of tech leadership and the kind of leadership they have on the vaccine manufacturing side. Energy transition also is has been kind of one of the leading industry where a lot of innovation is happening globally and also in India. This space has been kind of a key space to watch out for. IT space, we are seeing, in the underlying ecosystem, we are seeing a lot of development happening on the SaaS front. We all are aware of how now digital ad spends, and they are in India close to around more than 50% of the total ad spends are now on the digital side. Similarly, there are multiple successful examples of the online retailers kind of gaining disproportionately, and many other services which are kind of online only, and they are kind of including food delivery and quick commerce, etc., where India has made a lot of intervention and a lot of development. Lastly, on basically this is the last example before we get into the basically on the some of the highlights on the fund side. Some of the description of the on the fund side. I think this example talks about defense and how our systemic and a very large kind of a defense R&D spending over the last many decades. So to that extent, if you look at the right-hand side chart, top right-hand side chart, the defense, basically DRDO R&D spend in the current year will be close to around 26,000 odd crore. And if you put all the other companies R&D spend, we are talking about close to around 50,000 crore of R&D spend in the defense side. And we have seen the kind of fruits, basically the sum of the indigenization and is the result of not only the transfer of technology from other countries, but a large part of these indigenization is mainly because of because of the R&D, significant R&D ramp up which has happened in the space. Now moving on to the fund itself, very clearly this is the endeavor is to make basically a portfolio which is diversified and also again we will be kind of using the flexi-cap approach. I think one of the key slides which I wanted to show it to all of you is this one, where what we have done is amongst all the listed universe, we as in the research team of our house, we have rated each of the company, basically scored each of the company on a scale of 1 to 5, where 5 is the highest and 1 is the lowest. And what we found out is that in the score of 4 and 5, we have, which we are calling as pure play on innovation. There are 104 companies in that universe. If I include score 3, basically, so the scores 3, 4, and 5, there are 235 companies which have scores 3 and higher. This is our basically the overall eligible universe. So score 3 is the minimum cutoff. And if you look at the tables which are presented here, so out of the sectors which are coming, the top sectors are the first one is in the for the eligible universe, overall 235 companies. The almost 22% is autos and e-commerce, which are kind of categorized as consumer discretionary based on AMFI classification. Industrials, which includes defense and basically some of the equipment companies and other industrials also, they are close to around 21%. Pharma and healthcare is around 17%. Information technology is 14.5%. And commodities, which is basically specialty chemicals within commodities, is close to around 8%, and the rest of the sectors contribute close to around 15%, the remaining 15%. In terms of the, again, from a market cap, large cap, mid cap, small cap perspective, the highest contribution is of small cap. Again, I'm talking about the universe, which is 235 companies. And mid cap and large cap are respectively 24% and 19%. Yeah. So I think from one of the things which I wanted to highlight here again is from a valuation perspective, and this I'm kind of trying to answer this upfront because a lot of questions might come in on the eligible universe, that what is the kind of valuations which is there for the eligible universe. And we did this number. So on a 1 year forward basis, the PER of the eligible universe is almost close to around 20%, around 18 to 20% higher compared to NSE 500 valuation, which is again on a, which we have taken for a like for like basis, 1 year forward PER, which we have taken. And the growth rates are also higher, for the eligible universe, the growth rates are meaningfully higher compared to the NSE 500 growth rates for the next 2 years. Again, these are all numbers which we have taken from, these are Bloomberg estimated numbers and for the NSE 500. These are, I'll just quickly kind of try to finish, the remaining slides. I think, again, this talks about the valuation versus the growth part, again. So very clearly, if you look at, what we have given is basically the market cap to net sales of a tech, basically if the first example is, for example, a insurance tech company versus a traditional insurance company, the valuation is there and the growth rates are there. So very clearly in terms of the growth rate, the leading online insurance tech companies is growing at almost 5 times higher growth rate compared to more than 5.5 times higher growth rate compared to the traditional insurance company. But of course, the valuations are also higher. Similarly, in the retail space and the beauty retail space, we have given examples of the growth versus valuation. And, yeah, this slide is basically talking about, the summary of all we have talked about till now. Is basically on the different examples of innovations and the key pillars in the from an Indian innovation ecosystem point of view, and the multiple examples which we gave across the sectors, and some of the basically again the universe and the valuation framework which we kind of demonstrated for the eligible universe point of view. This is why, basically to why invest in the fund is very clear. I think what we have been talking about across the entire presentation was that we will be investing in some of the companies which are gaining market share, which are using innovative strategies to gain market share or to kind of protect their market share. And hence, fundamentally, these companies have higher growth rates. And these are the, basically the future ready companies, the leaders of tomorrow. And very clearly, these are some of the companies where even the management is very forward looking, and from an overall ecosystem, because until unless you have a complete ecosystem within the company, they will not be able to come out with a product or a service which will be able to kind of disrupt the overall market or the overall incumbents. And hence we are, the endeavor is to kind of create a set of companies in the portfolio which is future ready, and is kind of delivers a higher growth rate the over a period of time. And the we will employ bottom up approach, as we do for most of our other funds. So these are some of the key things which we wanted to kind of highlight, apart from the portfolio strategy and the universe which I highlighted earlier. These are some of the risks which are emanating from the economy itself, and what are the mitigants, uh, and some of the disclaimers.
Mutual fund investments are subject to market risks. Read all scheme related documents carefully.